Turkey has just followed in the footsteps of Russia and sold off 50% of their US debt in a rapid move to maintain stability of their currency. Will this really be resolved in this manner? We need to see who is buying and who is selling at this time. And we need to understand who is the lender of last resort and at what point do they go full throttle. You came here for the truth, so let me unveil that for you. Today we're going to look at Turkey, we're going to look at Russia, I'm going to show you who's buying, I'm going to show you who's selling, I'm going to show you all the charts that you need to see, and they will be direct from the source. Let's begin by taking a look at what had just happened recently. I had done videos about this. Russia had decreased their treasury holdings down from nearly $100 billion to $14.9 billion in a very rapid move. They had been decreasing their positions over the last few years, but in a rapid move, they decided to go ahead and drop them down significantly. There are multiple reasons for this. I've covered it in previous videos. Just wanted to show you that. Now, today we have Turkey in a precarious position because of their currency, and they had decided similarly to decrease their positions over time, but again, they really quickly sold off quite a few of them. They moved from this position about, let's say, $75 or $80 billion a few years ago, and now today they're sitting at 28.8, I believe the number is. So they have moved down quite a bit here in just a short period of time from 2017 into 2018, but most of that had come just recently. So we're going to see this continuing as their currency gets weaker and weaker and weaker. They will have to sell off their reserves. They will have to manipulate what they can. Now, this article here, a country in the crosshairs of American foreign policy, has experienced a drastic decline in its ownership of treasuries, falling off the list of major foreign holders of U.S. government securities. This here, it's $30 billion. If you move below that, then you're not considered anymore a major foreign holder. It doesn't have any real significance. Of course, it's just a number. However, Russia fell below that level previously, and now Turkey has as well. I will show you the charts directly from the government that is going to give you that information, okay? But I just want to show you this first. So they had moved down, as I said, $28.8 billion. They decreased these positions over the last little while, and there are, again, many reasons for this. So who's buying, who's selling? Let's look into it. Cayman Islands. You could see that from 2016 to present, they had decreased their positions, but in the last little while, as other countries like Russia and Turkey have been selling, Cayman Islands has been buying. Now, you have to understand, why is Cayman Islands buying? Well, Cayman Islands is often said to be nothing more than a shell to protect the real buyer. All right, a lot of money moves into Cayman Islands and they want to keep it secret. So that's what they're doing here. And who the actual buyer is, we don't know. But we can tell that it's coming through the Cayman Islands, and that is moving from a level of about, let's say, 165 up to now nearly 200. So this has been relatively significant enough to try and backstop some of the losses. Now, Japan is one of those countries that is holding on to a massive quantity of treasuries. From the end of 2014, they were holding $1.25 trillion worth, and now today they're just above that trillion mark. So it is a significant amount that they've been selling off over the last little while, but they're doing it slowly, they're doing it methodically. They are not necessarily just overnight kind of selling it. They have been doing this quite some time here, going back to levels, in fact, not experienced since 2011. So it is quite low, although they do still have $1 trillion worth, so it is quite a bit. Now, looking at this, China's treasury holdings, they are always fluctuating. You could see the big dip that it took at one point, moving just above the trillion mark, but then they started buying again. Now they're starting to sell again. So where they're going, we don't know, but it has been decreasing over the last little while something like Cayman Islands is coming in and having to buy it up. Then we look at the list, okay? This is directly from the Treasury's own website. I was accused previously of making up the charts, that this data is not relevant, is not valid, that I just create things out of my head. I don't know where people get these things from, but if you just want to, you can prove it to yourself. Don't even click the link in the description under sources, which I include in literally 2,000 videos that I've created on the channel, okay? Just go to a search engine and type in major foreign holders of treasury securities. You will get treasury.gov. You can pull up the data yourself. Okay, I've said it once again. Now, at the top of the list, China is there. Japan is just behind, and these numbers have flip-flopped on occasion. But ultimately, you can see what occurs here, that these two countries alone have $2 trillion worth of U.S. treasuries. They're the big holders, that's very clear. But beyond that, I mean, we look into Brazil, even Ireland. A lot of people were surprised about that. But I wanted to also touch on Luxembourg and Cayman Islands. Now, these are two countries that are going to be used as a shell, as I said, to prevent you from knowing who the real buyers are. And they, in the last, from May to June, they increased their positions from 209 to 219 here in this case, and 185 to 197. Not that big, but definitely a fair bit here. Okay, so we're looking at about $20 billion. So it's not insignificant, but in 1 month, 20 billion, that is, you know, it's of relevance, let's say. But you look down the list and you no longer see Turkey, you're no longer going to see Russia, and it's just surprising because they were on the list for quite a while. Now, looking through here, if you're interested, you can go through one by one and see who's been buying, who's been selling. I mean, there have been, you know, minor sells and buys, whether it's Belgium adding $4 billion, and you just go through it if you're interested to see what they're up to, and you can compare basically over the last year, so going back from June 2017 to present day, what they've been buying and selling. All I know is that here is the data, here's what we have. There's a little bit of shadow that blocks us from seeing all the details, but at least we know where they're coming through, and perhaps that could be one of the central banks using these different countries, that they can do so and hide the real purchases that they're doing. I don't know that that's what they're doing. I'm just saying that they could be doing that, all right? So that's a suggestion I have for you. Look into it a lot deeper, and I'm just going to touch on a couple more points before we end off here. Federal debt held by foreign and international investors. This is directly from the Fred website. I didn't make this chart up. I promise you that this is not a creation in Photoshop. I pulled it from the St. Louis Fed website, okay? So if you want to look it up for yourself, don't click on the link in the description under sources. Go to federal debt held by foreign and international investors. You'll pull up the St. Louis Fed's website. And you can see something I just wanted to know from here. A couple things, all right? Number one, the fact that, I mean, clearly this number has been expanding over the last few decades, very clear. One thing is that it's been stagnating over the last few years. That's one thing. If you look at it in the past, leading up to the year 2000, it also did this. In the lead up to the financial crisis, it wasn't quite a stall, but it was slower. The pace was slower in here. So that's something. I'm not necessarily suggesting it's completely correlated, but it's just an interesting point, okay? And that's it. You know, I want to move on right here quickly. And then looking at this here, the public versus intragovernmental debt outstanding. The red line is your public debt, and the blue line is your intragovernmental debt that they have nearly $5.7 trillion worth now today. These numbers are continuing to expand, and it is really never going to be paid back, especially the intragovernmental debt. They will absolutely never pay that back, and the number will continue to expand quite a bit. Public debt is a problem, and what are they doing? What are they doing this whole time in order to fix the problem? Create more debt. That's right, that's what they're doing. They're hoping that external sources will be there to buy it all up. But the important point, and what I want to finish off this video with, and unfortunately the people leaving the negative comments haven't made it this far, and they won't. But I just wanted to tell you the fact that, look, who's the lender of last resort? It's the Federal Reserve. It's other central banks. That's the only groups that will buy this garbage when it's all said and done. And what does that mean? Well, could mean inflation, could mean hyperinflation, but something else I want to point out. Isn't it so convenient that we have a crisis that's being developed and the central bank is going to come and save the day? They're going to be able to print up a bunch of money and buy up all the assets, the mortgage-backed securities. They're going to be buying up all the stocks, all the ETFs, all the bonds, and all the everything that you can basically say that, oh, we need help with. Okay, fine, just help us. And now the central bank owns everything. This is a genius plan, and they are going to completely take over with the permission of the people. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. When I see the thumbs up, it makes me happy. So please hit that button. And if you want the financial education you were not taught in schools, these two books have it all. Once you read these two books, you have the foundation, you have the history, you know what has happened, and you have all the resources in order to look into it for yourself as well. The Money GPS book actually has 222 references in this book. I mean, it's very well documented, so you could see everything for yourself. The Global Economic Collapse book is a very simple book. It's only about 100 pages or so, but it talks about the things that I didn't get into in the Money GPS. So it's kind of fitting into each other. I hope you will take a look. All you got to do is go into the link in the description. You'll be able to flip through the pages for yourself. And if you're more interested in the audiobook version, you can get that at themoneygps.com.